This is an analysis from Alpha Business Media. Welcome to the Deep Dive. Today, we're looking at a really fascinating economic paradox, and it's happening right now in Nepal.
It really is.
When you look at the data, you see a country that seems completely ready for a digital revolution. Mobile phone penetration is, what, over 130%?
That's right. More phones than people.
So you'd think, logically, that this would mean a cashless society, right?
Yeah.
Digital payments everywhere.
It absolutely should, but that's the counterintuitive part. The reality on the ground is, well, completely different.
How so?
The vast majority of the economy, the day-to-day stuff like buying groceries, paying for services, it's all still stubbornly physical cash.
So there's this huge gap.
A chasm, really.
Yeah.
A chasm between digital connectivity and financial digitalization. And honestly, we believe that gap represents the single largest untapped investment opportunity in Nepal today.
That's a huge claim. And that really sets up our mission for this deep dive. We need to deconstruct what's holding things back
The barriers, yeah.
and then identify the most lucrative investment ideas. The goal isn't just about replacing cash for the sake of it.
No, not at all. It's about building a system that's just inherently better, more valuable, more inclusive, so that cash just becomes obsolete.
A transformation, not just a substitution.
Precisely. The winners here will understand human behavior far better than they understand the tech.
Okay, so let's unpack that inertia. Let's start with the user. The phone is in everyone's pocket. Why is adoption for payments still so strikingly low? Why is cash still king?
It boils down to a couple things. Perceived risk and a real lack of immediate value. It's not just a habit.
So it's more than just, this is how we've always done it.
Much more. For many people, especially once you get outside the big cities, cash has real benefits that digital hasn't been able to match. The biggest one is a profound trust deficit.
A trust deficit. Tell me more about that. Is it about the technology itself, or is it more of a societal thing?
It's both, really. Think about it. A banknote is tangible. It's immediate. It's final. I hand you 500 rupees and our deal is done.
Right. It doesn't matter if the power's out or the internet is down.
Exactly. A digital confirmation on a screen feels abstract. It feels, vulnerable. What if the network drops? What if someone hacks my account? That feeling of losing control is a huge psychological barrier.
That fear is paralyzing for adoption.
And you also mentioned a weak value proposition. What do you mean by that?
Well, for a small, everyday purchase, the current mobile payment apps are often just a digital copy of a bank transfer. There's no compelling reason to use it if cash is just as fast or even faster.
So there's no wow factor.
Not for the user, no.
Yeah.
And this gets amplified by what we call merchant inertia. That's the real choke point.
The shopkeepers, the small vendors, what are their objections?
They've got three main hurdles. First is cost, specifically the merchant discount rate, or MDR.
That's the fee on every transaction.
Yes, that 2 to 3% that gets taken off the top.
Yeah.
For a small merchant on razor-thin margins, that's incredibly painful.
So if they sell something for 50 rupees, a rupee or two just vanishes. That's straight out of their pocket. Immediately, they feel that hit. Second is complexity. Setting up a new system, troubleshooting it when you're busy with customers. It's a hassle.
And the third barrier?
This one might be the biggest. Formality. Going digital means creating a perfect, verifiable record of every transaction.
Which means formal inclusion into the tax system.
And for a lot of these small, cash-based businesses, staying out of that system isn't just a choice, it can feel like a survival strategy.
So the benefits of going digital have to outweigh that perceived threat.
They have to completely dwarf it.
Okay, that makes sense. Let's step back from the user for a second and talk about infrastructure. And I don't just mean internet access. What critical pieces are missing from the ecosystem?
There are two crucial layers missing. We've sort of touched on the first one, which is digital literacy. You need these sustained national campaigns to build confidence and skills.
Not just a one-off tutorial.
No. But the second, and this is huge, is the CICO network. That's cash in, cash out.
The ability to easily move between the digital and physical worlds. Why is that so critical?
Because without a robust CICO network, digital money is basically useless in a cash-heavy economy. Imagine you get paid your salary digitally. Great.
But then you go to the market.
And your landlord, the school, the vegetable seller, they all want physical cash. If the nearest place to cash out your digital balance is miles away, that money is effectively trapped.
Useless funds.
Precisely. You need a dense, reliable, interoperable network of CICO agents. Think of it as an ATM on every corner. Building that network is a massive picks and shovels investment opportunity in itself.
Let's shift to the regulators then. The Nepal Rashtra Bank, the NRB, they've created a framework, but you're saying it can sometimes get in the way of innovation.
That's right. The current environment is very prescriptive. The licensing process is arduous. It's capital intensive.
It creates high barriers to entry for startups.
Exactly. It's almost impossible for a lean, innovative team to get started without massive funding from day one. Then you have transaction limits that stifle bigger use cases, like in B2B.
So it ends up protecting the established players.
That's the unintended consequence. And the single biggest piece that's missing from their toolkit is a genuine regulatory sandbox.
We hear that term a lot in fintech. What would that actually mean for Nepal?
Well, right now, if you have a disruptive idea, you have to spend years and a fortune getting a full license before you can even test it. A sandbox is a controlled environment
So you can test your idea on a small scale.
with real users, but under the regulator's supervision, it dramatically lowers the cost of innovation and failure. It allows for agile enablement, not just strict control.
Okay, this is where it gets really interesting for anyone looking at this market. We've laid out the problems. Now, what are the actual investment plays that go beyond just another payment wallet?
This is the key. The future is not in the wallet itself, it's in the platform. Which brings us to investment thesis number 1, the Payments Plus Super App.
Payments Plus. So payments are the entry point, but not the end goal.
Exactly. The payment is just the gateway. The real gold is the data that flows through that gateway.
Why is that data so much more valuable than, say, traditional bank data?
Because it's real time, it's high frequency, and it captures the informal economy that banks can't see. You get this incredibly precise ledger of someone's economic life.
And with that ledger, you can build what? An alternative credit score?
You've got an accurate credit score for millions of people who are currently invisible to the formal banking system because they don't have collateral or a credit history.
Walk me through an example.
Okay, think of a small shopkeeper. She uses the app to accept dozens of small payments every single day. The app's algorithm sees that consistent cash flow.
It sees stability.
It sees stability and predictability. So after a few months, the platform can offer her an instant pre-approved microloan for 50,000 rupees to buy more inventory.
A loan she would have zero chance of getting from a traditional bank.
Zero. The super app becomes her financial partner for credit, for insurance, for savings. It's indispensable.
That's real stickiness. That's how you break the cash habit.
Yeah.
Now, what about the second thesis? You mentioned it targets large-scale inefficiencies.
Right. That's investment thesis number 2. Vertical-specific B2B solutions. Consumer payments are flashy, but the biggest volume of cash and paper is actually in business-to-business supply chains.
Like agriculture or construction.
Exactly. Think about the agricultural supply chain. It's a mess of paper invoices, cash changing hands, security risks, reconciliation delays. It's incredibly inefficient.
So you build a closed-loop system just for that industry.
Precisely. A platform where a wholesaler can pay a farmer instantly and digitally. But here's the plus part.
The sticky part.
The platform tracks that farmer's delivery history. Based on that reliable data, it offers him credit for seeds and fertilizer, which is then automatically deducted from his next harvest payment.
You're embedding the service directly into their core business operations.
It becomes part of their workflow. It solves deep operational pain points, which makes it incredibly difficult to rip out.
Okay, so whether it's the super app or the B2B solution, it all comes down to getting merchants on board. How do you solve for their 3 big objections? Cost, complexity, and formality.
You need a really clever, multi-pronged strategy. On cost, you have to innovate the business model. You offer 0 MDR for small transactions.
You make the basic payment free.
Yeah.
But how does the company make money?
The revenue comes from value-added services. You sell the merchant tools to help them run their business, better inventory management, payroll, and especially that access to credit we talked about.
So the payment is a loss leader to get the data and the relationship.
That's the model. Monetize the intelligence, not the transaction. Then for complexity, the onboarding has to be radically simple.
As easy as signing up for a social media account.
Yes, mobile first, QR codes, minimal hardware, and fantastic local language customer support. If it takes hours to learn, it's dead on arrival.
And finally, formality. How do you get them over that fear of the tax man?
You have to reframe the entire conversation. This isn't about compliance, it's about growth. You show them that the tangible benefits, access to credit they could never get before, better business insights, far outweigh the perceived costs of formality.
And you probably need the government to help with that.
Absolutely. You need policymakers to create real tax incentives for SMEs that digitize.
This all points to a clear call for action then. It's not just going to happen on its own. What's the directive for policymakers and for investors?
For policymakers at the NRB, job one is to launch a real, flexible regulatory sandbox yesterday. And they need to work with the finance ministry to create those tax incentives we just mentioned. They have to be active catalysts.
And for investors who are listening to this and seeing the opportunity,
Look deeper. Don't fund another generic Me Too wallet. Look for the companies that have a clear roadmap to that Payments Plus ecosystem.
the ones using data for things like alternative credit.
Or the ones with those defensible B2B vertical strategies that are embedding themselves in an industry. That's where the real long-term exponential returns will be found.
This has been an incredibly thorough deep dive. We've gone from the paradox of connectivity to the trust deficit and landed on these future models of super apps and specialized B2B platforms. So for you, the learner, what's the big takeaway here?
The big takeaway is that the winning platforms will be the ones built on a deep, almost obsessive understanding of the end user, whether that's a farmer in the field or a shopkeeper in Kathmandu. It's about flawless execution on the ground. And here's the final thought to really mull over. If a platform becomes so valuable that going back to cash is unthinkable, what does that mean for a country? What are the long-term implications, societal, economic, of having a fully digitized, real-time transaction history for an entire population that was, until now, built on the anonymity of cash? That transparency changes everything.